Hey everyone, I'm Brooke from Low Stress Trades, where we provide live trade ideas with high probabilities of success. Our goal is to help you achieve consistent profits with minimal stress. You don't have to spend your entire day managing trades. Just one well-chosen trade a day can help you grow your income, whether you're looking for passive or active earnings. And remember, while these trades have a high probability of success, they're not financial advice. Always do your own research. Our team posts these trades live in our Discord, so if you want to follow along in real time, make sure to join using the link in the video description. And if you enjoy this video, don't forget to like and subscribe for more daily content. Since July 29, 2024, David, one of our top traders, has completed 24 trades, 23 wins, and just one loss. His total profit over this period is an impressive $12,345. If you're curious about the details, you can check out the shorts he made on our channel for verification. Each of these trades is documented there, showing you exactly how we've been able to achieve such consistent success. Let's talk about the core trade we use, credit spreads on the SPX. This strategy is all about finding the right balance between risk and reward. We focus on setups that have a high probability of success, over 90% accuracy in fact. Here's how we do it. Market analysis. Every day, we start by analyzing the market conditions. We look for key levels of support and resistance on the SPX, paying close attention to price action and volatility. Selecting the strike prices. Once we identify the market direction, we choose strike prices that are out of the money, giving us a cushion in case the market moves against the position. This increases the probability that the options will expire worthless, allowing us to keep the entire premium. Now, a big part of our strategy is understanding how much the S&P 500 is likely to move in a day. For example, a 1% move is typically around 55 points, and a 2% move would be over 100 points. We take these percentages into account when looking at the standard deviations, ensuring that our strike prices are set in a way that aligns with these expected movements. Now, let's talk about one of the key tools we use when selecting the strike prices for our SPX credit spreads: standard deviation. Don't worry if this sounds technical. I'll break it down so it's easy to understand. What is standard deviation? Standard deviation is a statistical measure that tells us how much the price of an asset, like the SPX, tends to move away from its average price over time. In simpler terms, it helps us understand the range within which the price is likely to stay. Understanding the levels. On our trading platform, we use an indicator that shows 1, 2, and 3 standard deviations from the current price. Here's what that means. 1 standard deviation. The price stays within this range about 68% of the time, meaning a 68% chance it won't move beyond this level soon. 2 standard deviations. The range is wider, with a 95% chance the price stays within it, making trades safer with only a 5% chance of moving outside. 3 standard deviations. The widest range, with a 99.7% chance the price stays within, making it very low risk for trades outside this level. When selecting strike prices for our credit spreads, we focus on standard deviation levels. Choosing a strike price beyond 2 standard deviations from the current price means the probability of SPX moving beyond that level is very low, only about 5%. This approach allows us to consistently select trades with high probabilities of success. By placing our trades based on these standard deviation levels, we're effectively putting the odds in our favor. It's like betting that the price will stay within a certain range, and statistically we're more likely to be right, increasing our chances of profitable trades. It's important to note that the standard deviation indicators we use update in real time. As the price of SPX changes, these indicators adjust based on the latest price action. This real-time adjustment helps us make informed decisions throughout the trading day, ensuring we're always aligned with market movements. We also have specific timeframes that I prefer to use, as these timeframes react more favorably to the standard deviation levels. This gives us an even stronger edge in our trades, allowing us to optimize our strategy and increase our success rate. Let's talk about risk management. Even with a high probability of success, managing risk is crucial. We always set up our trades with a defined risk, meaning we know exactly how much we stand to lose if the trade doesn't go our way. This disciplined approach is key to long-term success in trading. As you saw on day 13, David wasn't afraid to close a trade early to minimize losses. To help manage risk, we also set trade alerts that will trigger if the price starts moving against our spread and reaches a threshold we're no longer comfortable with. These alerts allow us to close out the position quickly, minimizing any potential losses. This proactive approach to risk management helps us protect our capital and maintain a steady growth of profits over time. Executing the trade. After finalizing the setup, we place the trade and monitor it briefly throughout the day. But remember, the beauty of this strategy is that it's low stress. You don't have to sit in front of your computer all day. Your risk is controlled, and your trade has a high chance of success. We also call out any risk live throughout the day on our Discord. After the trade, we review the outcome, regardless of the result. This helps us refine our strategy and improve over time, ensuring that we maintain a high success rate. Consistency, discipline, and low stress are the pillars of our trading approach. Let me show you an example on random day in the past. First, I'll open up my Think or Swim trading platform. In this demo, I'll use June 11th as our day. Once you're in, navigate to the top left corner where you'll see the search bar. Type in SPX to bring up the S&P 500 index. After selecting SPX, you'll see the current price and a chart displaying its recent performance. This is the underlying asset we'll be trading on. Next, click on the Trade tab to open the options chain for SPX. Since we're focusing on 0DTE, 0 days to expiration trades, select today's expiration date. Trading on the same day expiration allows us to capitalize on rapid time decay, which can work in our favor when executing credit spreads. This approach is ideal for capturing premium quickly. Now, look for the strike prices that align with your standard deviation analysis. Remember, we want to choose strike prices that are out of the money, ideally beyond 1 or 2 standard deviations. This increases the probability that our options will expire worthless, allowing us to keep the premium. To set up the credit spread, select a strike price below the current SPX price for a put spread or above for a call spread. Right-click on the strike price you've chosen and select Sell. This will initiate the short leg of our spread. Next, choose a strike price further out of the money and right-click it, then select Buy to create the long leg. By selling the closer strike and buying the further strike, you create a credit spread. You'll see the potential credit or premium you'll receive from this trade in the order preview. Make sure the net credit is worth your risk, usually aiming for a risk-reward ratio that fits your trading plan, like 1.4 or better. Before placing the trade, double-check the details. Look at the probability of the SPX staying within your strike prices until expiration. If you've chosen wisely, the odds should be in your favor. Also, review the potential max loss and max profit shown in the order summary to ensure it aligns with your risk tolerance. To manage risk, consider setting up an alert in Think or Swim. You can set an alert to notify you if the SPX price starts moving towards your short strike. This way, you can take action, like closing the trade early to minimize potential losses if the trade starts to go against you. Once everything looks good, it's time to place the trade. Click Confirm and Send at the bottom of the order preview window. A final confirmation screen will appear, showing all the details of the trade. Review these one last time, then click Send to execute the trade. Your credit spread is now live. After placing the trade, monitor the SPX price and your trade position. Remember, the goal is to let the options expire worthless, but if the market moves against you, be ready to adjust or exit. With good strike selection and risk management, you can successfully profit from these trades. Let's see how we did. Look at that. Max profit of $800. So that's the strategy in a nutshell. If you want to see these trades live, join our Discord community. Link is in the description. And remember to like and subscribe for more in-depth videos like this one. Trading doesn't have to be stressful or time-consuming. Stay tuned for more videos and we'll see you in the next one. Thanks for watching.